This is Will County's News Talk Sports 1340 WJOL. Money Talk brought to you by NuMark Credit Union. Did you know what you can refinance with your auto loan? And you can refinance your auto loan. Refinancing the vehicle at NuMark Credit Union is a great way to do more with your dough. With rates as low as 1.49% APR, now is the time to lower your monthly payment on your car, truck, or motorcycle. Apply today by calling 815-729-3211 or apply online at newmarkcu.org. That's NUMARKCU.org. Limited time offer. Some restrictions apply. NuMark Credit Union, where you are family. Well, it's good to have you aboard on this Tuesday. We'd like to say good morning to Harry Stewart. He is the Vice President of Mortgage Lending for NuMark Credit Union, and he joins us on the Turk Furniture studio line. Mr. Stewart, good morning, sir.
Hey, Scott. How you doing?
I am doing awesome.
Pleasure to be here, as always.
Absolutely. You bet. Well, Harry's here. We're going to discuss financing your home during COVID-19. And I got to tell you, this guy is so dedicated. He is on his vacation with his family right now, and he's still calling into the radio show.
Well, good workers never rest.
It's called making sure your job's safe, right?
Yeah, and I enjoy doing this, though, too. I really do.
I know, but you are enjoying some time with the fam and stuff like that, so it's great to have you with us. We're going to be talking about financing your home during this pandemic and what some things are that you can do. We do also want to remind you that we're going to be giving away a $25 Visa gift card at the end of the show. Something Harry says is going to spark a question in my brain. I'm going to then ask that question at the end of the show. And if you're the first correct caller on the Turk Furniture studio line at 254-7300, I'm going to give you a $25 Visa gift card, compliments of NuMark Credit Union. So that's how it works. But Harry, how have you and your family been staying safe during the pandemic?
You know what? I don't notice too much. I would say most of the time, like if we're not going out places, it's not going to the movies, it just seems like a little bit more of an inconvenience because it's not like we're really going to nightclubs or anything anyway. I would say mostly the dinners, family dinners, when we would go out or go into the movie theaters is the kind of an inconvenience to have that stuff down. But I would say for the most part, staying home, doing the social distancing. That's really what we're doing. Wearing masks if we're out. I don't know if it's working, but I'm gonna knock on wood and say we haven't gotten sick yet that we know of.
Right, absolutely.
This COVID's really strange. Where 60% of the people that get it don't know they get it. So who knows?
Harry, you have a big family, a lot of little ones at home and some not so little ones at home. How are they coping with something that they probably never ever even thought about having to try to live through?
Well, my youngest is probably he's like, well, why can't I play with the neighbor kids? You know, when we're on that lockdown for 2 months, so he didn't understand it. We're just like, we just want to make sure we stay healthy. So it wasn't. For everybody else, it is kind of like, especially teenagers, they're like, I want to go out with my friends. I'm like, can't. So, but I look forward to getting back to normal.
Yeah, absolutely. All right, well, let's get into the mortgage industry, which is what you are an expert in. What is happening right now in the mortgage market other than extremely low rates?
Well, it seems like every time I come on the show, I've been coming on your show for probably 10 years or so. Every time I come on, I talk about the mortgage rates being historically low, and they are the lowest I've ever seen them right now. Even lower than 2013, 2016, when we had like nice little mini refi booms. Like right now, I would say the 15-year base rate, you're looking mid-twos. For the 30-year fixed base rates, you're looking at high twos, maybe 3%. So those are strong rates, and it's very unlikely that you wouldn't be able to help somebody out by refinancing them into a lower rate right now. Usually it's like, well, can we get your rate lower? Can we help you with term? But it's like 9 out of 10 people that we talk to, we're able to help them out somehow.
Well, it is unprecedented times. There's no doubt about that. Now, we're still in a pandemic. Is this a good market for home buyers? We know sellers. We talked about this earlier this morning when you weren't with us here. I know some realtors that are telling me, man, they put a house on a market, 2-3 days later, they have 6 or 7 offers. What about home buyers?
Well, it's definitely a seller's market, but buyers can also pick up great deals right now. In the pandemic, we really had a pause from like March to May, but it didn't really didn't diminish as far as demand goes. You know, it was all that pent up demand, and as soon as everything started freeing up and people felt a little bit more comfortable, the purchases started coming in. So I would say right now, refinances are about 60% of our business right now, and 40% of our business is purchases. So I would say there's great deals for home buyers, and it's a great opportunity to sell too, especially with the demand. I know people that have put offers in and they're not able to get in. They're putting offers in at like the list price or above the list price, and they're still not picking up the home because of the multiple offers. So.
What about first time home buyers, for example, who want to take advantage of the market? They see the rates, they're like, man, we can get what's not free money, but pretty darn close. But maybe they're not ready to buy a home. What advice would you have for them?
Well, the lower rates, obviously, it's a great way to take advantage with these lower rates. Just gives the home buyers, any home buyers, not just first time home buyers, but extra buying power and more purchasing power. I would say, with it being the pandemic, you really don't. We really don't know how this is going to affect the economy 6 months from now or 12 months from now, because of it's almost like a trickle down effect. That if let's say these vendors are working with a lot of sporting arenas. Let's just say it trickles down. If you're not having all these events, these big events, somebody that makes something that they sell to these events might lose their job. So I would be cognizant of that. If I'm a first time homeowner, make sure you're in a stable industry. I would make sure that you have reserves, just so you don't jump both feet in, because I know we talk about this during the first time home buyer show that we do, but there's a lot of expenses that pop up as a first time home buyer. It could be an appliance, it could be like a hot water heater goes out, a lot of different expenses that you're not expecting becoming a home buyer. So I would just make sure you have a little bit of reserves to fall back on if something were to happen.
Sure. We're talking to the Vice President of Mortgage Lending for NuMark, Harry Stewart. This is 1340 WJ. Well, Harry, I know the answer to this question, but just to be clear, credit unions work a bit differently than banks do. So some might say, well, I'm not sure NuMark will refinance my home and deal with mortgages, but the answer to both of those questions are yes and yes.
Yes. Yeah, we absolutely refinance homes. And like I was saying, there's a good percentage of our business right now, about 60%, just because there's so many people we can help. Like what I was saying is, like in the past, if the rates were down a little bit, you might be able to benefit maybe 5 or 6 out of 10 people that are calling in looking to finance. Now it almost seems like we could benefit 9 out of the 10 people we talk to in one form or another.
Yeah, and it is, sure, absolutely. Yeah, I mean, pretty much everyone can, and it's rare, everyone can benefit pretty much from this situation that we're in. And how does someone know, though, if refinancing? Are there certain parameters that they need to hit in order to realize they can refi?
Yeah, it depends on what they're looking to do. A lot of times people are looking to take cash out or any other any number of reasons. It could be to consolidate debt, to consolidate like a first mortgage and a HELOC, to reduce their term. I see a lot of people going from like a 30-year mortgage to a 20-year, a 15-year, just to cut down and lower their rates. If you're looking just to refinance into the same term, usually my general rule is you want to drop your rate by at least 1%, and you want to recover your closing costs within an 18-month period. It's not like a set rule that I have, but that's kind of a general rule. Sometimes on a higher dollar amount, it'll make sense to reduce your rate by 0.75%.
Okay.
And sometimes if your loan amount isn't that high, let's say $50,000-$70,000 loan amount, sometimes it doesn't make sense. Even if you could drop your rate by 2%, it's not going to make sense, just because the payment, and you know how the amortization tables work on mortgages. After a while, you're applying at the beginning. You're applying most of your payment is going towards the interest, right, and a very small percentage is going towards the principal. But over the time of the loan, you've got big chunks going to principal and a little bit going to interest. So it kind of depends on everybody's individual situation, whether or not it would make sense.
Harry, what are the first steps needed to purchase a home?
I would say the very first step would be getting pre-approved.
Okay.
And usually I could do that within a 20 to 30-minute appointment. I'm going to be looking at credit, income, and assets to do your pre-approval. And if I'll always run it through like automated underwriting system, so I know it's going to work. So
okay.
That would be the very first step.
Okay.
Pre-approved.
Now, there are two different things with pre in front of them: pre-qualification and pre-approval. What's the difference there?
You know what? A lot of places will use those two terms interchangeably. But the difference that I see between them, you know how you get the almost generic postcards in the mail saying you're pre-qualified to buy this. I think with those pre-qualifications, I'm pretty sure they're just doing like a generic mailing based on your credit score. So if you're alive and you have a credit score, you're pre-qualified. The way I look at a pre-approval is somebody's looking at the income, somebody's looking at the asset, somebody's reviewing the credit and running it through like one of these automated underwriting systems from Fannie Mae or Freddie Mac, which basically determine whether or not like what you have to do to purchase a home. Or
okay.
Like, hey, give me this, and this, and you're approved to purchase the home with 3% down or 5% down. So it'll basically tell us that you're approved. And sometimes if it doesn't, we have to change gears and go to a different loan product.
Sure.
So,
Harry, is there a formula for finding an affordable mortgage? I mean, because you got to budget a lot of things. You got to budget a car. You got to budget, family. You got to budget a lot of different things. I mean, what kind of way is there to determine a budget for an affordable mortgage?
I think so. I think there's two angles to that. I would say if nobody's going to know your own budget better than you. You know how much you can afford, how much you're making, how much disposable you have, because you have a number in mind of this is what I feel comfortable paying every single month. Now on our end, on the lender's end, we're going to look at formulas. Like we don't know all that other stuff about you, but what we will do is determine your debt ratio. And that's your monthly income versus your monthly expenses. And typically, we can approve those up to 50% or higher in some cases. But does that mean that is going to work for you? Sometimes yes, sometimes no. I would say a good comfortable number is under 40% debt ratio. But can we do something at 45 or at 50? Yeah, we can.
Okay.
Sometimes people don't feel comfortable going that high, and sometimes people will be like, "Oh, that's all I can afford." Like they want to go higher, but the debt ratio rules kind of prevent us from doing that. So.
Okay. For those who aren't familiar with the whole process, can you give us a quick rundown of the home buying process, start to finish, to getting the keys and moving in?
Yeah, I'll do my best to summarize that. So if the very first step is going to be getting pre-approved. Let's say you come to my office, I give you a pre-approval. You've got a realtor that you're working with. You go out, you find your dream home, you make an offer on the property. Sometimes it might be it might take several offers, especially from what we were talking about earlier. There's a lot of homes that get multiple offers, and you're not always going to get that. But let's say you make an offer, your offer is accepted. You have to give them earnest money. In most cases, there's going to be earnest money involved. Earnest money is basically like a good faith deposit on the purchase of the property. I would say from that point, the point you enter your contract, I would say it's anywhere from 30 to 60 days before you're actually going to close. You'll have an inspection period, 10 days, where you'll order an inspection of the property, determine any issues that could be any issues with the property that you're not going to see with the naked eye when you go in there. Once you get that back, everything's still a go, and the inspector doesn't find anything that you don't agree with or you want to proceed with.
Right.
On our end, we're going to order the appraisal. The appraisal is just going out there to determine the value of the property.
Sure.
Anything that's really sticking out, they're going to mention in the report.
Okay.
They're going to send us back the appraisal, and all on the back end. While this is happening, we're dotting our I's and crossing our T's. We're doing our verifications. We're chasing down additional asset documents or additional income documents. We're getting the title from the seller's attorney. They typically use the title companies in the area. So we're getting the title back from them. We're getting our flood certs and insurance documents. So we're chasing all this stuff so everybody's basically working on the loan at the same time.
Whole big team of people, yeah.
Exactly. That's how it's kind of amazing how it all comes together when you think about it.
Absolutely. Hey, here we got just a couple of questions left. I want to get to choosing a right real estate agent and the websites like Zillow, Realtor.com. So how do we find a real estate agent, and are those websites, are they good to go to?
Well, a good real estate agent is going to be somebody that you connect with and that'll work with you. I would definitely find a full-time agent that's familiar with the area and works well with you. That's probably the best bet. We've got several partner realtors that we work with that are fantastic. As far as home search websites like Zillow or Realtor.com, sometimes it's accurate, sometimes it's not. What I like to do, like on Zillow, I'm not gonna just look at the estimate that they give you. It's their estimated value. I'm gonna zoom out on the map and find like the yellow sales within the last 12 months to get a good, accurate picture of value, because that's exactly what an appraiser is going to do when it goes out there. Yeah, I would say that's probably the best way to do it. Or if it's a refinance, I'm gonna do all that stuff for you anyway.
You got it. All right, and last but not least, Harry Stewart, Vice President of Mortgage Lending, NuMark Credit Union, would like to talk to you. Refining, buying a home, how can they get a hold of you? Because these market rates are extremely low. They may even go lower. So how can people get a hold of you at NuMark?
The best way is just to give me a call. The number 815-744-6767. You can always call our main office. I'll always ask for Harry. I'm the only Harry at the credit union, so I'll get it.
All right.
Or, if it's on the weekend or if it's while I'm in Texas, like right now, you'd always go to our website, www.numarkcu.org. Just go to mortgage loans and fill out an application, and I'll make sure either myself or one of my senior loan officers.
Beautiful. Absolutely love it. Harry, thank you, buddy. Enjoy the rest of your trip, and thanks for letting us horn in on the Stewart Family Vacation 2020.
No, I enjoy it. Thanks, Scott. I really appreciate it.
All right, brother. Be good. That's Harry Stewart. He is the Vice President of Mortgage Lending for NuMark Credit Union. All right, here's our question. Give away a $25 gift card courtesy of NuMark Credit Union. We talked about income to debt ratio. And he said it could go as high as 50%. What did he say he'd be comfortable with, more comfortable with than any other number? 0, obviously, but that's not going to happen. He gave a percentage. It wasn't 50, so don't guess 50. What percentage would he feel comfortable doing? 815-254-7300. First correct caller wins $25 from NuMark Credit Union.